I'm Charlotte McLeod with investingnews.com, and here today with me is Steve Barton, host of In It to Win It. Thank you so much for being here in person. Very exciting.
Yes, thank you for having me, Charlotte.
Of course, great to have you. And as everybody can see, we're not set up today to share charts, but I do want to start with the gold price, as we usually do. When we last spoke, we were talking about whether it could hold the 4,100 level, which ultimately it didn't. It even got below 4,000. So can you map out the potential downside for gold at this point? I know we're doing a little bit better than that at this point.
Yeah, I would say we basically have a floor. I would be floored if gold got below 3,500, and if it gets down to that level, I think it's going to be a quick V-shaped type recovery. So picture like the COVID crash and then recovery. I think it'll be a chart something like that. So in anticipation of that, what I've done personally is I loaded up on some gold stocks, basically buying now. I think we're essentially at the floor now. I think around 4,000 or 3,950 where we hit is essentially the floor. If I'm wrong and we do have some type of correction down below that, then I have limit orders, and I kind of put them at levels that I really do not expect to get hit, but it takes only a minute or two to put a limit order in. It takes almost no effort at all. All you need is cash in your account. And so I put in limit orders going down below that on mining companies in case that happens, but I don't expect it to. So I would put the floor at 3,500 and the ceiling at 7,000 plus over the next couple of years. So I really like the risk reward right now on gold. I think it's probably one of the best bets we have at this time.
Right. We had talked about that 3,300 to 3,500 as the real floor for gold. I was going to ask, what's the likelihood that we get there? It sounds like probably not very high at this point.
I wrote in my last newsletter only a couple of days ago, I think 10 to 15%.
Okay.
So I think there's, 1 out of 10, maybe, a little bit more than that. That amount of times we'll get down to 3,500. So I don't expect it to happen, but it happens often enough, I think, where it's worth taking the 15 minutes and going through your portfolio and saying, okay, well, Agnico Eagle is at 150 right now. Let's try 125. If it happens, I think it's going to be quick, and I don't think that you'll be quick enough to react to it. You just need to have those orders in just in case it happens.
Yeah, right. So even if you don't really think it will happen, you can still set yourself up just in case.
Just in case, yeah. Somebody's going to get the deal, and it might as well be you.
Yeah, of course. Well, and let's make sure that we talk about the downside for silver as well. So since we last spoke, it's gone below $60, and you talked about 50, maybe 48 as the probable floor. So is that still most likely where you see silver bottoming out?
I do, yeah. There's a definite resistance up above right now is at $64, after that $69, and then after that $72. I don't think we get up to 72 anytime real soon. The floor I would put in as having heavy support around 50 to 54, and then kind of give it a little grace down to maybe 48 or so. So yeah, I like the risk reward now on silver as well. Basically when you're looking at the price action of this, you have to look at like the all-time highs, like we have in gold of 5,500, and like we had in silver of intraday 120. There's probably going to be some selling around those levels because there are people that bought at $5,500 gold and they're just waiting for it to get back up to then. So it would be very unlikely, I think, for gold or silver to get to those all-time highs and not have some type of hiccup. And but yeah, I think the floor is still around 48 to 50, somewhere in that ballpark. And I think that now is a really good time to be looking at some silver miners. When you took profits back up at the top, if you did, you can redeploy some of that cash right now.
Yeah. Hopefully you did, and now you can enter again. For silver, one of the questions I want to be asking people here, we're at the Rules Symposium right now, is can it retake that triple-digit level this year? What do you think from a technical perspective?
Wow, I didn't expect that one. This year, let's see. Well, I suppose anything could happen, but I would put that as unlikely. I don't think that'll happen. I think gold is, it's going to follow gold, I think, like it normally does, and gold probably doesn't get up to the all-time highs until 2027. So my guess would be no.
Okay. Okay. We'll see. We'll see what everybody thinks.
I hope I'm wrong.
Yes. Yes. Let's
hope
hope.
I'm
Let's
wrong.
hope we can do it again. So I know. Of course, you're bullish on gold and silver in the long term. That's pretty clear. For you, what would signal that they're done going down in this sideways period that we find ourselves in now?
Well, a couple of things. Number one, on the charts, and the charts don't really look to me like, I think we need to kind of put in a basing, like a bottoming pattern. We're starting to see that in gold. I don't see that in silver just yet. Another thing is sentiment. I'm starting to see some of the sentiment indicators that tell me that we're darn close, right? But I haven't seen that real like capitulation yet. I haven't seen the hate that Rick talks about in the comments. I use the YouTube channel and Twitter and my other social media outlets to kind of gauge sentiment because I've found over the years it's amazingly accurate. And I haven't seen that real, what's the dire word that Gareth uses? Despondent. I want to see him completely despondent, and I haven't seen that true, real capitulation yet. So I think we're close because there is some definite frustration in the comments, but I haven't seen that the thesis is broken yet, and that's, I think, a thing that can really mark the bottom.
Okay, so those are a couple of things we can watch for. And I know you're really focused on the charts, but anything on the fundamental side that might help to signal that turnaround for gold and silver?
On the fundamental side, I would say that when you look at their all-in sustaining costs, I guess on the surface you could say that a lot of them could go down quite a bit more. I mean, most of these big companies, their base case is $2,000 gold. So by that logic, it could go down a lot more. With all of our countries, I suppose the world, governments on all their debt and deficits, I don't see that happening. I mean, every government on the planet is printing more currency like it's going out of style. They're spending it like drunken sailors. I just don't see that happening. So, no, I still think the floor is around 35. I cannot picture it going any lower than that. I mean, if it is going to go lower than 35, it's going to be an intraday margin call type thing. So no, I don't see it going below that.
Yeah.
I really don't.
Yeah, just too many underlying factors on the supportive side. All right, so you were talking at the beginning of the conversation about how you've used these lower prices as a buying opportunity. Can you say anything else about the types of precious metal stocks you were picking up at that time?
Yeah. So over the last week, I've loaded up on royalty companies. So I like Royal Gold a lot. I like Franco-Nevada. I also like, as far as if you want just a beta gold miner play, I think Agnico Eagle is a really good deal right now. They're here at the symposium. If you want a little more alpha play, then I like Banyan Gold a lot. They've got a drill program right now. They're fully cashed up, and they're hitting targets like it's going out of style. And I think they're going to be doing really well. If you really want an alpha play that is, in full disclosure, I own these companies that I'm talking about, so I have a vested interest in you buying them. A real alpha play is one called Nations Royalty, and they have a royalty on the KSM deposit, which is Rudy Frank's Seabridge deposit. And if Rudy can get a deal done, if he can get a joint venture done with, Newmont or whoever, or fill in the blank, I think that Nations Royalty, this little tiny royalty company that has a royalty on that deposit, is going to re-rate instantly overnight. And the beauty of this bet is that the free float shares that are available to Nations Royalty, to anyone watching the show, is very small. So near as I can figure it, it's about 8 to 10% free float. So, no market orders, limit orders only. And it's high risk, but very high reward. I think that could be a really, really good one.
Right. So big if, but I know Seabridge is working hard on finding that partner. So we'll see how it goes. We'll leave gold and silver for now. We said we would also talk about copper. So what are you seeing going on with copper right now? We've spent time in the past, I think recently, talking about nickel. So how is copper looking?
Copper is looking pretty good. We're definitely up, flirting with all-time highs. It's all-time highs right now are around $6.70-something cents. We're around $6 now. I think the floor in copper is somewhere slightly north of $5. And I would say the ceiling, near as I can tell from talking with guys like Rick, is probably closer to 8. So I like the risk reward on copper right now as well. I think fundamentally it has an amazing runway. We as a planet are not going to be able to mine as much copper as we're going to need over the coming decades. And I think that's just a slam dunk bet as far as a commodity. You know what I mean? Like, that's why I love this sector, is because I love betting on commodities, is because there is a true supply demand deficit. It's not like Microsoft, where they come up with a new computer program and then as many people can download as they want. There only is so much of a metal or a iron ore or whatever the commodity is on the planet, and if there isn't enough of it, that's where you get these price spikes, and that's where we can really make our money.
Tell me a little bit more about how you approach the copper companies, because I always get a little bit stuck on what level to go for, because they have these really long timelines. So it feels almost, well, if you invest in an explorer, how long and how will the market be when that's eventually coming into production? So how do you look at that?
You know, it's funny you mention that, because I just had Rick look over my portfolio. I filmed it for my premium guys, and one of the weaknesses that he said, and I had in my copper portfolio, was I didn't have any beta. And he says, all of your plays are alpha, so you could essentially, we could have an amazing copper run, and if these specific companies don't do well, you're not going to get anything out of it. So I recently just added some beta to my copper portfolio. So I would look at it kind of like, depending on your age. If you're older, you might have 80% of your copper portfolio in beta and 20% in some of these little junior explorers. For me personally, I'm trying to get that closer to 50-50. So have like half beta and half alpha in some of these explorers.
Okay, so you got to spread out your exposure there.
I think so, or you run the risk of, like I did a couple of weeks ago, where we have an amazing copper run and it goes to $8, like I told you, and none of my explorers work out, so
Yeah.
I didn't make any money.
Yeah,
That would be a shame to forecast it and not be able to capture that,
Yeah, it makes sense. Nobody wants to have that happen. Okay, that helps us understand how to approach copper, I think. And we said we would check in on uranium as well. So uranium, we know, can be a little bit frustrating for people. We have these ups and downs in the market, and you've really emphasized in the past that you have to trade those and be in and out of those. So where are we at for uranium? How should we be looking at it right now?
Fundamentally, it's an amazing setup. We have a spot price right now of around $85, and we have a term price right now of a floor of $95.50. So what that means is, if a utility company, so let's say Duke Energy, wants to buy some physical uranium to feed into their power plants, it's going to cost them $85 per pound right now today. If they want to buy it on term contracts, as these guys look out decades into the future, the minimum price right now for a pound of uranium going out 12 months or more is $95.50. So we can essentially, in theory, forecast the future that 12 months from now, the cheapest spot uranium price is going to be $10 higher than it is today. That's good, right? So I think the fundamental case is amazing. The chart is going from the bottom left to the top right. Now, that being said, uranium is probably one of the most fickle, volatile markets in the commodity sector, and that's one of the reasons that I love it so much. At this exact moment, I think we're coming into a buying season for uranium. So we had that really nice price spike recently, and then we have a sell-off, and this sector, I've been following it for, 4 or 5 years now, and it really has these peaks and troughs that seem to last 18 to 24 months. And so when you get that euphoric price spikes like we recently had, that's your time you got to click the sell button. Now we're starting to get into those summer doldrums. Oftentimes, I follow Justin Hune on Uranium Insider. I think you've interviewed him as well. Yeah, he found a pattern that during the summer, it most often sells off. We're in the summer, right? And we're starting to see uranium equities sell off. So it seems to be following that pattern. I'm doing the same thing with that, just buying on the way down. And you just have to have patience through this sector that it will reverse. As long as we keep building nuclear power plants, we're going to need more uranium, and it will reverse, and it will get back up to those price spikes. So suffice it to say, I think we're in the buying season here for uranium, and I expect that to end late summer.
Okay, you're right. I think there's a conference maybe that comes toward that time when the excitement tends to heat up for uranium. So,
Yeah.
all right, we'll keep that in mind. We'll check back in on uranium, see how it's doing next time we talk. And I think we're here at the Rural Symposium. We said we would talk about your strategy here. So there's lots of companies, you can't see them in here, but they're out on the show floor. Which ones are on your hit list? Can you tell me about what you're going to be doing here the next few days?
Yeah. So I've come here, and I basically don't have a schedule other than one with you, and I have a couple people scheduled. But most of the time, I like to, I get a hit list before I go, so I have every company printed out and notes on all of them, and I'll go to each one and I'll talk to them and just get an idea of a feel for the people. And I've learned from investors more experienced than myself, especially Rick, that the number one thing that you need to pay attention to, especially in these little junior companies, is the people behind them, right? So, what kind of feeling do I get? What feeling do I get in my gut when I'm talking to this person here at the booth? Are they really excited about their company? Sometimes they're not. Sometimes they're bored. You don't really see that at Rick's conference here, but like, what feeling do I get when I'm talking to this person? And if they're really excited about their project, if they can't, you don't want them like tugging at your shirt, but they should be able to sell their company and actually believe in it. And it's differentiating between, like, is this someone that I want to invest my money and my time? There's a lot of study that goes behind all of this. This is the person that's backing this company. What kind of feeling do I get when I'm in front of them and I'm talking to them? Because you had to work, you had to do something to produce that money. Now you're handing it over to them. You want to make sure it's not going to a lifestyle company.
Yeah, I was wondering, when you come to an event like this, is it more for you about checking in on new companies or seeing ones that you already know about or have invested in? It sounds like maybe it's an opportunity to meet some new faces.
It's both.
Okay.
It's both. Yeah, it's to check in with the ones that I own, interview as many as I can, and then try to find some new ones. Yeah.
Any interviews that you're really looking forward to that you're going to be doing?
All of them. I would say probably the biggest one is the Nation's Royalty one I alluded to. Those two guys, Derek and Cody, they're younger than me, so I look at that as like, I'm trying to find the next Ross Beatty. I'm trying to find the next Robert Friedland. I'm trying to find the guy that has 30 years to go, because that's hopefully what I got. You know what I mean? So I want to find those guys now that I can invest in, the right people that I can, find the next Ross Beatty for the next 30 years. And I'm very optimistic on those guys. They have an amazing work ethic. They get out here on the floor before everyone else. They leave after everyone else is gone. They're rock stars as far as I'm concerned. And whatever company they're behind, I want to bet on it.
Okay, well, that definitely sounds really promising. I wonder if you can talk a little bit more about your strategy for deploying cash after you go to an event like this. You meet all the companies. Are you waiting till after you've met everyone, after the event is over, to start deploying cash? Are there ever times you have a conversation and you say, okay, that one is one that I need to have?
Yeah, last year I had a conversation with Tara Christie of Banyan Gold, and I'd been studying the company for about a year, and the unanswered question for me was, where is their starter pit? Because they had low-grade deposit spread out, but what you need with these mines, or these potential mines, is you need kind of a high-grade starter pit, something that this company can go to the bank and say, hey, we've got a big deposit right here. We need $300 million to build this thing. You're going to recover that $300 million in 24 months because we can get it all out right here, and we can put the mill right next to it. And then after that, we can go out and we paid the bank back, right? Well, after my interview with her, I realized they found their starter pit, right? So I literally told my subscribers, I'm like, hey, the unanswered question is answered. And last year the stock was 18 cents, and now it's over $1. So that worked out. So sometimes, I guess the long and short of it is, sometimes it's instant, and other times it's I may wait a little bit. Want to really look at the stock chart. That was one of the ones that I didn't even need to look at the stock chart. It didn't matter. The answer was there.
Right. It sounds impulsive, but you've already done the work to back it up. So really, it's not. It's just a continuation of what you've already been doing.
Oh, that's a good point. Yeah.
All right. Well, I think that gives us an idea of what you'll be doing here. We'll be sure to keep an eye out for your content as well. We did a good job, I think, covering the basics: the gold, silver, uranium, copper. I know sometimes you have other commodities or areas of interest on your radar. Anything else you would want to mention?
I've talked about nickel quite a bit on your program, and I was getting very excited. Just to wrap up for anyone that didn't see that, on the charts, we had a bull pennant, which is a very bullish pattern, followed by a cup and handle, and all of that just completely fell out of bed. I felt like we got dealt pocket aces, and the other guy had 7-2 offsuit, and he won the hand. And so right now, we're having a pretty good pullback in nickel right now. Fundamentally, the case looks amazingly bullish. We have most nickel, 2/3 of every pound, or 2 out of 3 pounds of every nickel for the planet comes out of Indonesia, and the government is starting to curb that output. They're doing it at the expense of the destruction of their own oceans and land, and they said enough is enough, so they're going to curb the output. Another big, chrome is probably 60 to 65% of the planet's demand for nickel. And then also is batteries. So long distance for EVs, for electric vehicles, is another demand for batteries. And BYD just came out with a thing saying that we've found some new technology where we don't need to use nickel for these long-range batteries anymore. Not great for the nickel commodity price, right? So that one came out of left field. I didn't see that happening. We'll see if it's actually true or not. I don't know how much of this is real, or if it'll really catch on, or if what are the long range implications of this. I don't know. I was talking to Rick about this, and he said, I think there's enough base case in the use of nickel that it's probably okay. Here specifically at the conference, there's 2 nickel bets that I'm aware of. One is Centaurus Metals. That is a giant deposit down in Brazil. I'm going to interview Darren Gordon here and pick his brain on that. It looks like they're all in sustaining costs. They're probably still going to be profitable as long as it's north of $4 a pound, and right now we're around $7, so I think that bet is still on. Magna Mining has a really nice nickel grades and a deposit, but they're probably not going to move operations and move over to that until nickel gets up to maybe $10 a pound, so we're a ways from that. A little disappointing on nickel. I thought we were going to have a breakout here to $9 while we're at this conference, and the exact opposite happened. It flushed from $8.50 to $7, so can't win them all.
Well, sometimes that does happen, and with the whole Indonesia situation and the battery chemistries, I know those can change from time to time. So we'll keep an eye on nickel. We'll see how it goes.
Yeah.
And I have, I think, one more fun question for you before I let you go. So when we spoke at the end of 2025, and I'm going to try to ask this to others here as well, I asked for your pick for top performing asset of 2026, and you had said copper. So we're halfway through the year. Do you want to stick with copper? How are you feeling about that now?
Copper's had a nice run. What could be next? That's a good one, Charlotte. Now that we're coming into, if we could start the starting line at where gold is now, I think gold's got a pretty good chance. I mean, if the let's say the floor is at around 4,000, that's a pretty good one. Silver, I'd rather hold out on that one a little bit. Copper's kind of at all-time highs. Nickel has just fallen out of bed. I wouldn't go there. Oh, you know what might be a neat one for the rest of the year is probably oil.
Okay.
Yeah.
Okay.
Oil is sitting around. I put the floor at oil right now at $65. I think I checked this morning or last night, and it was at 67 or 68. So that's, you want to start at the bottom. I think, let's say oil.
Okay.
Yeah.
Let's go with oil, and we'll check in with you at the end of the year. We'll see how that's doing. All right, I will send you back on the show floor. Did you want to mention you have your technical analysis course that we usually mention before I let you go?
Yes, yeah. So I love looking at charts and charting on technical analysis, and I came out with a course that it it's for beginners. And so I basically show you with the program, we use TradingView, and I show you mouse click by mouse click how to set up your charts so that you can read them. And then the other 2.5 hours of the course is reading chart patterns. So looking at moving averages, RSI, MACD, price action, volume, all of that, and kind of putting it into a picture of, when you think is a good time to buy and when you think is a good time to sell. And so basically the way I look at it is the fundamentals, they tell you what you should be buying and what you should be selling, right? And the technicals, the charts, they tell you when to do that. So, like I was talking about right now, in oil, you can tell on the charts that the floor is essentially at $65. So that's probably a pretty good time to start allocating some capital to some oil companies. And once you get those big price spikes up, that will tell you on the charts when the time is to sell. So I really love technical analysis, and thank you for mentioning that, Charlotte. I appreciate it.
Of course, of course. And we'll have links in the video description if people would like to learn more. Well, thank you so much for coming on. I think this was a great conversation. Nice to have you in person. And yes, I will send you back out onto the show floor now.
Okay. Thank you, Charlotte.
Amazing. And once again, I'm Charlotte McLeod with investingnews.com. And this is Steve Barton of In It to Win It.